Welcome to today's Explainer. Okay, so today we are diving headfirst into unraveling a massive corporate fraud that secretly targeted the hard-earned money of everyday retail investors. You know, when you put away 500 or 1,000 rupees a month into an SIP, you totally trust the system to build your wealth over time. But what happens when the very people managing your money are basically rigging the game against you? Well, today we're exposing exactly how the Axis Mutual Fund front-running scam actually worked.
30 crore rupees. I mean, just let that sink in for a second. That's the sheer scale of the illicit profit siphoned off in this massive betrayal. And before we break down the nuts and bolts of how these insiders managed to pull this off, I really want you to keep this figure in mind, because this absolutely wasn't a victimless crime. This wealth was extracted directly from the potential returns of everyday middle-class investors just like us. The real tragedy here isn't just the millions stolen, it's the silent theft of future wealth from ordinary people who were diligently investing small amounts, month after month, just hoping to build a secure future.
Okay, let's dive into this. Here's our roadmap for today. We're going to cover the 30 crore mutual fraud, what front-running actually is, tracing the scam network, the 4 years to justice, the crime, punishment, and recovery, and finally, how to protect your SIP investments. All right, Section 1, the 30 crore mutual fraud and the hidden cost to everyday investors. Moving right along to Section 2, what is front-running? Understanding the invisible crime. So to really grasp this, we first need to understand how mutual funds actually operate on a day-to-day basis. When a massive fund buys a stock, they aren't just buying, 10 or 20,000 rupees worth like you or I might. They are placing orders worth hundreds of crores. An order that massive, it causes the stock price to instantly spike. So front-running is basically when someone on the inside knows this giant order is about to happen and they leak that highly confidential information. In the Axis Mutual Fund case, the chief dealer, literally the guy holding the keys to these massive orders, was tipping off his associates before the fund even made its move. Let's move to and see how this builds into what's called a buy-buy-sell pattern. First, the corrupt network gets the tip and buys the stock early while it's still cheap. Step 2, the mutual fund places its massive multi-crore buy order, which artificially spikes the stock's price right up. Third, the network immediately sells their shares at this new inflated peak for a guaranteed 100% risk-free profit. Meanwhile, the everyday SIP investor ends up buying mutual fund units at a way higher cost because the stock price was artificially pumped up before the fund could execute its full trade. Basically, you lose out on the cheap entry price.
But here is the crazy part. They didn't just profit when the fund was buying. No way. They profited when the fund was selling too. Using a reverse sell-sell-buy tactic, the network would find out exactly which stocks the mutual fund was about to dump. So the network would short sell the stock early. Then, the mutual fund dumps massive volume, causing the share price to come crashing down. Finally, the network buys the stock back at the rock-bottom price to settle their trade, pocketing a huge profit. They were literally winning in both directions, completely at the expense of the retail investor.
All right, Section 3, tracing the scam network, the Jadugar Syndicate. You know, it's like a giant puzzle. Notice how this whole operation functioned like a highly organized, well-oiled corporate machine? At the very top, we have Viresh Joshi, the chief dealer at Axis Mutual Fund. He's the insider leaking the trade data. He passed this over to Brajesh Karani, a trader sitting all the way in Dubai who actually executed the illicit trade so they wouldn't raise immediate suspension back home. Then you've got Sumit Desai managing the shady accounts, Pranav Bora arranging the brokerages and trading terminals, and Vaibhav Pandya acting as the crucial link keeping all these moving parts connected. Now you might be wondering, how do you quietly move 30 crores in illicit profits? Well, this syndicate relied heavily on traditional Angadia or Havala networks, as well as something called mule accounts. A mule account is simply a dormant, inactive savings account that they literally rent from an everyday person. The syndicate would pay someone a small fee to just rent their unused bank account for a few days and then use it to quietly wash their illegal trading profits without triggering any alarms under their own real names.
Section 4. 4 years to justice, from suspicion to verdict.
And this brilliantly illustrates just how long these regulatory crackdowns can actually take. The painstaking journey began way back in 2021 when the market regulator, SEBI, first noticed some highly suspicious trading patterns around Axis Mutual Fund trades. They started tracking call details, mobile data, and even intercepted WhatsApp messages that were using the secret code word Jadugar. By May 2022, Axis AMC did an internal probe and fired Viresh Joshi. In 2023, SEBI swooped in with an interim order, completely freezing and seizing the 30 crores. And finally, in July 2024, after a massive joint investigation with the Enforcement Directorate, a devastating 146-page final order was officially issued.
Section 5. Crime, Punishment, and Recovery. Where did the money go? Let me tell you, SEBI absolutely did not hold back here. Check out these heavy penalties. Viresh Joshi, our mastermind, was slapped with a 7-year ban from the securities market and a massive penalty of 3 crore rupees. Brijesh Karani, the Dubai trader, also caught a 7-year ban and a 1 crore penalty. Sumit Desai faced a 5-year ban and a 65 lakh rupee fine. The entire network was dismantled, barred from trading, and heavily penalized, really sending a chilling message to anyone else out there thinking they can rig the system.
But what about the 30 crores that was stolen from the system? I know we're all wondering if we get our money back. Well, unfortunately, because of the complex nature of mutual fund pooling, it's mathematically impossible to directly identify and refund the exact fractions of rupees lost by millions of individual SIP investors. So instead, SEBI takes all recovered funds and deposits them straight into the Investor Protection and Education Fund. This war chest is then utilized to fund financial literacy campaigns and build way better surveillance tech to protect us all from future frauds. Which brings us nicely to Section 6, protecting your SIP investments. How to shield your wallet.
So the crucial point is this. When news of a massive scam like this breaks, the absolute worst thing you can do is panic. Seriously, do not stop your SIPs, just diversify them across different fund houses. Listen, 90% of the market is completely genuine, and regulators like SEBI are actively out there hunting down the bad actors. But, you still shouldn't put all your eggs in one basket. Even if you love a particular fund house, don't put your large cap, mid cap, and small cap investments exclusively with them. Diversify those 500 or 1000 rupees SIPs across different fund houses. That way, if one happens to suffer a governance issue, your overall portfolio remains perfectly balanced and secure. And I want to leave you with this final, honestly pretty provocative question to think about. Is your dormant savings account being rented out as a mule account? We just saw how the Jadavgar syndicate used everyday people's unused bank accounts to quietly move millions of rupees. If someone ever offers you a quick buck to just rent your inactive account for a few days, remember this explainer. You could unknowingly become the very final link in a multi-crore corporate scam, and when the authorities come knocking, they'll be knocking on your door. So stay diversified, stay invested, and most importantly, stay vigilant. Thanks so much for joining me on this explainer, and I'll catch you in the next one.